Hello, everybody. Hey, it's Mark Johnson here, and I just wanted to take a few moments to go over what's happened to interest rates over the last week here. Last week, we saw that interest rates went down on the Freddie Mac weekly survey to 6.9%. That was on Thursday. And on Wednesday of last week, the Federal Reserve had their open market committee meeting, and they went through and raised interest rates by another 0.25% on the Fed funds rate. And so their new range is between 4.5 and 4.75%. They've raised rates to 4.5% since March of 2022. And so the Fed will likely raise rates again one more time on their meeting on March 22nd. They could also do another one in April, but we'll just have to wait to see what happens there. And this is all in line with the idea that they had in December that they would keep rates somewhere between the 5 to 5.5% range. So we're getting really close to 5.5%, or excuse me, to 5%. So hopefully we're going to start seeing some real numbers on inflation starting to come down. We're seeing a few places where that's happening, but not everywhere. But then the big thing that really happened on Friday of last week, and I'm going to take you to the 10-year Treasury so you can see what that looks like here. You'll see that the 10-year Treasuries went way down right here, and then went way up on Friday. This was Friday, this was yesterday, and this is today. Now you'll notice the technicals are just still showing a decline in interest rates. But after the jobs report that came out, that was a lot stronger than what the market suggested that it would be. As a matter of fact, it was way more, and that's why you had interest rates pop up very, very quickly here. They came down when the Feds talked about, their Fed policy, and then that was on Wednesday. Then we had Thursday right here. We're thinking, oh, good, we're going to see some better rates. But as I told many of you, watch out because Friday's number can be deceiving. It'll probably raise rates. So I was in a locking position to have any new loans that came in that I would lock in during that day. Now, here's a couple things that I'm seeing today is that on top of this jobs report, over the weekend, we saw central banks in Europe also raise their interest rates. And that has caused our rates to just continue to keep on going up here. And so where we might start seeing some easing in interest rates, I can't really tell you. I think for the next week or two, we're going to be in a little bit of high area. I would go ahead if you're out looking for a home or you've got buyers that are looking for a home, I would say go ahead, get under contract, find the house that you want, and then maybe just float for just a little bit longer because I think interest rates will start to come down. We'll see some more things in the coming weeks, but not too much this week here. So the bottom line is that, again, the technicals are showing that, yes, interest rates are still coming down, and they're likely to keep on coming down. We've got a nice, floor of support right, or a ceiling of support right here, and it's just been bumping up against this, and it's trying to go over it. Hopefully today we'll close below that, and then we'll see what happens for the rest of the week. It'll just basically be on the technicals. And when I say technicals, what I mean by that is that things like like announcements, there's no big announcements during the next week that could cause interest rates to go down or probably go up either. Anyway, if you have any questions, please don't hesitate to reach out to me. Thanks for listening, and we'll see you maybe in a couple of days here. Hopefully we'll see rates come down, but probably you're going to see the average rate going from 6.9% probably back up to 6.13 like it was a week ago. All right, have a great day.